Good afternoon, traders. Here we are. It's FXTrader Paul's Monday Market Update, 12:30 London time, Monday, the 19th of October. Hope you've all had a good weekend. Hope you're all well. Hope you're all safe and sound wherever you are. As always, for those of you joining us for the first time, this is just supposed to be a 20-odd minute, quick run through what we're seeing in markets and what we can maybe expect this next coming few days. Have a little look at one or two stocks that are of interest, and then primarily focus on the sort of the FX and indices. As always, all information provided is for educational purposes only. Trading on margin carries a high level of risk, and you should be aware of all the risks associated with margin trading. If you've joining us for the first time, just to give you a flavor of who I am and how I look at these markets, well, it's probably easy to start with what I'm not. I'm not an economist. I'm not a financial advisor. And whilst I use analysis, I don't consider myself an analyst as a primary role, nor am I axe cap yet. But what I am is a trader, which basically means I'm just looking at markets through the sort of the prism of risk. Okay, I'm always looking at managing my risk first and seeing what opportunities come out of that. So as always, I start every week with just a quick look at the kind of strength and weakness in the FX markets and some of the big major indices. For those of you, I appreciate some of you might not really recognize this. My strategy in FX markets is very simple. Namely, I want to be buying strength and selling weakness. That's it. Okay, you have lots of different tactics and mechanics of how you do that, but the overall strategy is to look at buying strength and selling weakness. So every weekend I'm doing my own analysis, and trying to understand where the strength, where the weakness is in the market, so that I can start to form my trade views for the coming week. So let's bring up the old drawing tool here. So what I have here is, I manage it on the kind of major sort of 8 currencies there. And what I'm looking at here, this is 19th of October, is that sterling is bottom of the pile along with the US dollar. Okay, they're 7 and 8. But on the flip side, at the top of the pile, we've got the Swiss franc. All right, and we also have the Canadian dollar, which has just kind of strengthened, as you can see. 3 months ago it was bottom of the pile. Now it's up to number 2, and the Swiss franc has just over the last couple of weeks just strengthened into the sort of the number 1 position. So. And what I'm also interested in is seeing that Japanese yen is also number 3. So what we have there, ladies and gentlemen, is a little bit of a case of we've got Swiss and yen getting up to the top of the pile with a bit of CAD as well there. So just remember, Swiss and yen is when they're strong, there's an indication that there's a risk off mentality, which is what I was talking about last week and a few of my other videos have done. If you read my newsletter, that's not a surprise. I think we're here with a couple of weeks to go to the US election, and as we'll look at the charts, just give us an idea that basically everybody's starting to sit on the sidelines and wait to see what actually is going to happen. The big boys are going to wait for the resolution of that US election. Whichever way you think it's going to happen, as I've said all along, I think markets just want a clear resolution. The last thing they want is a contested result, which is very, very possible. But so in the FX markets, it's definitely a risk-off sort of mentality. The interesting thing is, though, is that if you look at here the sort of kind of the major US indices, Dow, SP, Nasdaq, Russell, they're all pretty bullish right about now. And I think part of that is a case of the sort of conversations, the sort of rumors that Pelosi and Trump might actually get another stimulus deal done this week. There's talking that might possibly happen. So invariably, markets are a little bit hysterical on that. It's just putting more booze in the punch. In the summer punch, everyone's getting drunk on the summer punch. That is, one or another form of quantitative easing. But what I'm seeing there is, the kind of the Nikkei and the bigger major American indices have all been very strong. So we'll look at that in the charts in a moment themselves. So you've just got a bit of an idea there, but that's just to give you a flavor of what we're looking at in the coming week. And as always, I like to have a look at just one or two stocks that might be of interest. Okay, I'm clear that I'm primarily an FX and index trader. That's where primarily my focus is. But listen, this year you can't have missed out on some of the stellar moves we've seen, and this is one. Okay, this is Peloton. All right, Peloton. Those for those of us who are here up in Northwest Europe, you've been bombarded by young fit people on interactive bicycles, okay, and paying quite an extortionate fee. But clearly that has been fantastic during lockdown, and we looked at this quite a lot during lockdown. So as always, I am a better trader than I am an artist. So just excuse my drawings there. All right, it's just but we were in a bit of a block there. Okay, Peloton only came in sort of mid of last year in a block doing nothing. All right, but then as kind of lockdown bit, we had a breakout. We pulled back, retested it, and we were talking about how it had just done really well from being down here around about $20, okay, sort of January, sort of February, March. Well, we were soon up at $45. Then we were up at $70. I thought we might take a little bit of a break here. This is sort of July, August, September. We might actually get a double top as nations start to come out of the real severest cases of lockdown. That didn't last very long, did it? And then, of course, September, we start to get numbers coming through again of, an increased infection rate, and lockdown is happening. And wherever you are, we can see that's occurring. And Bosch, what do you know? That has been fantastic for Peloton. So, from being at the start of March, all right, being at $20, well, we've traded up to like $140, and you can see for yourself, it's just ramped up there. Okay. Absolutely ramped up. So for those of you who joined us in the early year sessions that I was doing, we'll be talking about this and how to buy into it. If you bought into that, well done. If you're if like me, your pension has benefited from it, well then fair play to you. All right, well done. It's just been quite just a shocking chart to look at. All right, absolutely stunning movement. And on the other one, one of the other kind of what we saw was the let's call it the kind of the COVID QTs, all right, that did well was Zoom. All right, I kind of said back in March that really all you had to do was basically buy Zoom and sell Regis Group IWG. All right, and that was your COVID trade. And you can see once again, it only kind of IPO'd last year, all right, and then prices were effectively, here we are, down low here. I think we were about $60 odd, and then of course as everything got locked down, we went to $125. Same as Peloton when everybody started to come out over the summer. All right, prices started to a bit of profit taking there. But Bosch, you can see as those infection rate numbers have gone up. All right, we've broken out again from 275 up to look at that, tickling the soft underbelly of $560 there. Right, so it's that has just been something from $60 to $560. In the space of like 9-10 months is just absolutely astounding. So once again, if you've bought into Zoom, then that has just been well done to you. All right, fair play. That's we talked about it an awful lot at the when I was doing the daily sessions back in sort of March, April, and May. So yeah, so there's just a couple of fantastic charts to look at. Just one little last thing. If you want to learn more about swing trading FX, I'll be doing an online 2-day course November 19th and 20th. Some details there. It's about understanding how to understand strength and weakness within FX markets and how to use it to your advantage. If you want to know more about the details of it, just ping me a note and we can have a chat about it. So what we'll do, let's switch across to the chart. So just bear with us a moment. I'll just do that. What are the charts we get up here first? Okay, so here's the first charts. All right, we're going to have a look at. And this is a Canadian dollar profile. All right, so if you join in for the first time, my charts are very simple. All right, green bullish, red bearish. 20 period moving average is a blue line. The 50 period moving average is a red, and I've got the green 200 period moving average with fractals on there, and that's it. That's it for the most part. So CAD, as I said, CAD has been strengthening, hasn't it? That's what we talked about just a few moments ago, right? In terms of where it is at the strength weakness matrix. So let's have a look at one of the kind of interesting things, and it kind of just proves a couple of the comments. This is Canadian dollar against the Swiss franc. So at the moment, that is they're number 1 and 2, right, on my strength matrix, right. So what I'm, as I said, I'm always trying to trade strength against weakness, sell weakness, buy strength. When I've got a couple of currencies that are very strong together, well, what you find is very often is they tend to balance each other out, okay. And so in terms of actually trading, unless there's a massive disparity, most of the time trading number 1 against 2, it's not really a smart move, okay. They sort of cancel each other out, and this just kind of looking at this CAD Swiss franc, all right, weekly chart. Well, we're just getting more sort of confirmation of that. You can see here, right, for the 20 period moving average, right, it's just gone sideways really since August, okay. And you can just see when I look at that, I see that as prices coiling up, okay. Prices coiling up, it's getting ready to make its next move, all right. The question is, which way is that next move going to happen, and what will be the catalyst for that to occur? So, both Canada and Swiss, will do all manner of things. Okay, I'm sure they've got all sorts of particular topics that they want to focus on and deliver and do. But the reality is that it's going to be the US election. All right, the US election will be the catalyst. All right, and what will we see? Will we see? If in particular where then the risk off mentality increases, okay, then well invariably that will see Swiss franc increase. If there's a different victor, okay, and it starts to make let's say more palatable relationships between the US and Canada, is that going to have an impact on strengthening the Canadian dollar? We shall wait and see, right? But at the moment, you can just see that for yourself. It's just going sideways. It's coiling up. It's doing nothing. Okay, it's just absolutely just a good sign of what's happening here. Okay, and I don't expect it to really do too much for the next couple of weeks until we get that particular blowout. And what we have had, just quickly look whilst we're here on the Canadian dollar, we've had the Aussie against the Canadian dollar. All right, here's the weekly chart. We collapsed at the start of COVID, and then we just had this huge, great run on Aussie, and that was the same against quite a lot of those Aussie against most currencies. We had actually basically Aussie was like top of the dog, all right, in terms of the top of the pile. But actually, what you can see here, okay, over the last couple of weeks, all right, hitting the 200 period moving average, it's just basically been it was hitting into a period of congestion, okay, from earlier where we'd priced and traded there in 2018. But actually it's drifting down there. And if I go down to the daily chart, all right, yeah, this is a nice, it was almost like a kind of triple top here, okay, that we had on Aussie against Canadian dollar. And what happened is we kind of rolled off the top, came back up, retested the 20 and 50, and then we've drifted down there, okay, in the daily chart. And that's, triple top followed by, a lower high. That's a nice kind of reversal pattern, okay. Nice to see, yes, it took a couple of months to actually show up and play out, but, if you're trading on the daily and the weekly charts, that's not a particular shock, but, that's just giving us an indication that, Aussie's getting weaker, Canadian dollar is getting stronger. That's what you're looking at. That's what you're looking at there. And if we look at, let's have a quick look at CAD yen. Okay, well, if you look at CAD yen in the weekly chart, it once again, it's not really kind of very exciting. I don't particularly see it as exciting in that sense. Okay, it's just another form of kind of coiling up. I'd be saying is that it's just. There we go. There's support there underneath it, but there's resistance there. Okay, you might even want to draw a bit like the CAD Swiss. You might actually want to sort of draw kind of like that. But it's just a case of prices around the 50 and the 20. Okay, it's inside where most of the action has been for this year. It's just it's waiting for the next bit of major data. Everybody's going to be sat on their hands waiting for it. So let's have a little look at maybe at the some of the indices, and then we can finish off with sterling. Okay, for the end. Let's bring up. Here we go. So this is just a profile of indices. So I've got the Dow, the Nasdaq, S&P 500, the Russell up here, and then I've got oil, the DAX, the Nikkei, and the UK 100 FTSE. Okay, so let's have a look at S&P 500 and. If I just zoom out here, so this is the daily chart, all right? Daily chart here, and yeah, we had a bit of a push up high there. Okay, start of September we really fell off there. Okay, put in a sort of ABCD pattern, and I thought we'd rally up here, and I thought we'd drift our way down again. This was a nice big key reversal, but you can see for yourself, the kind of just like a meth addict, all right, okay, being offered the opportunity of a sniff of more meth. The markets at the scene at this first bit of a sniff of a stimulus happening, whoosh. That's what we see. Okay, we've pushed up there. I mean, I have to remember it's in Trump's favor. It's in Trump's favor to keep the stock markets, just going higher, or at least keep them sort of wafting higher, and that's what we've seen here. And if we go down to the 4-hour chart. For our chart last week, okay, we had a really nice start to the week, drifted all our way down. I actually look at that as a bit of a kind of a 1, 2, 3 pattern. There's 1, there's a 2, there's a 3, lower highs than the 4, and now I'm looking to see, right, well, actually, what's going to happen here? What's going to happen here this week? If the stimulus happens, then I suspect we'll drift back up, okay, and break those highs. If we have 48 hours of just basically arsing around and going nowhere, then I expect to see price roll over and drop. Okay, and then you're looking at that 4-hour 50-period moving average, which has acted as significant support in the past, and also this kind of this recent low here about 34.30. Okay, so it's just waiting. There's a decision going to be made on that stimulus, and that I think will drive all of those US indices. Okay, this coming thing here. If we look at the daily chart here on the Nasdaq, okay, it's pretty much the same. Having pushed our way up, we have a little bit of a pullback there. Okay, looking at the 4-hour chart. 4-hour chart, you might even look at that as there's a bit of a head and shoulders happened there, and it drifted. And once again, what we've got is 50-period moving averages acting as support. You've got the 20-period pressing you above and the 50 acting as support. To me, that is price once again. It's coiling up, waiting for a decision on what's the next move to make, and that's what it's looking for. Okay, so look at these US indices over the next 48 hours. They'll be interesting to see. Hear that news, okay, from whether it be Pelosi or Trump talks about it. That's going to have I think that'll have a kicker. All right, just I think of a short-term kicker, but it'll shift that market one way or another. So let's finish off with sterling here, okay? Because it's it's one of the things that most people here will trade. It's also we've looked at strength in terms of CAD and Swiss franc, and you might remember that the sterling was at the bottom of the barrel, so to speak. So let's just put these all across onto the weekly chart. So not unsurprisingly. All right. So if you remember, we've had the US dollar and the US dollar and sterling have been bottom of the pile. So, for the last couple of weeks, all right, last month or so, 6 weeks or so, invariably, we've just seemed to have been clinging around this 130 level. Okay. Just been there. We fell off beneath it, come back up to it. And I now look at us and basically just was squeezed. All right. There's 130 there. Daily 20-period moving's beneath us. The 50-period is above us. Price has just been squeezed up in there. So, what we have here is, of course, the US election on one side, but then on the flip side, we've got the Brexit negotiations. All right. So, on Friday, Mr. Johnson, okay, basically sort of talked about how we're basically probably going to be looking towards an Australian style no deal kind of Brexit. That kind of pushed sterling down on Friday, but then rumors around this over the weekend that we might actually just get an interesting, okay, a bit of a change, okay, in rhetoric from both sides, and that's given sterling a bit of a bump this morning. So we're looking at that, okay, but once again, as I said, that's just it's squeezed between the 50 and the 50 to 20 and the 130 level, okay. So until we get some clarity on that, I think that's just what it's going to do. Look at another one, euro against sterling. Okay, so I think I've talked about this last week. Is that when there was talk of basically they were just going for the kind of there was going to be no deal at all. What we saw was sterling dumped, the euro rallied, but actually it's drifted our way back. And I think I said last week, we've just been kind of sat a little bit on that sort of weekly 20-period moving average. Yeah, the highs are getting lower on each one on the weekly, and if I go across the daily. Well, what I'm looking at here is the 20 is acting as support. I look at how every time price pushes up there, it gets rejected, and 50 is trying to hold there. 50 and 90, okay, the big round number. So it's a case of which one's going to give first. Is it going to be the 20-period moving average, or is it going to be the kind of 90 region? So Price is squeezing up into that. Maybe we'll get some resolution on that this week, okay, based on comments on the what comes out of the kind of Brexit negotiations. I believe Mr. Barty and Mr. Frost are having a chat at 3 o'clock London time this afternoon. All right, there you go, ladies and gentlemen. It's always supposed to be a little bit fast and furious, okay? If there's questions or if there's things you'd like me to see cover every Monday, just shoot me an email or send me a tweet or something. I'm happy to do that. I hope you found this useful. As always, I wish you the best of success in your own trading, ladies and gentlemen. And undoubtedly, I will speak to you soon. Many thanks.